issue. I don't know what the issue was. I signed out, signed back in.
And we're good now, Mark. So we're going to get started, okay?
Good.
Thank you very much, everyone. This is Jim Riggio. It's the Roundtable. Today, we're going to be speaking with a professional trader by the name of Mark Ansel. Mark has developed over the last 20 some odd years different trading systems, which is all culminated into his current systems that he's trading called Night Owl. But before we get started on this Roundtable on February 2nd, Friday, 2018, a quick disclaimer, Capital Discussions is not a broker-dealer or investment advisor. We're not making any trade recommendations. This presentation is for educational purposes only. If you do end up trading, please realize trading options and futures is risky. Please be aware of all risks prior to placing any trades. And with that, Mark, welcome.
Thank you. Glad to be here. Glad to finally get in. Security was so tight I couldn't even get into my own webinar.
We ended up hearing you, but I'm glad. There's just the same disclosure. What we're going to end up doing is that I'm going to go through a quick introduction of Mark, and so I get a chance to introduce you. And then the way Mark and I we formulated this is that we're going to end up doing this in a question and answer session in and around his system. I guess I was first introduced to your system, okay, and you, Mark, back in Fort Lauderdale in the days that we ended up working with Roman and Glenn and some of the other guys down there. That had to be 7 or 8 years ago.
Yeah, something like that, 2010 or 11, somewhere in there.
Yeah. So Mark's been a professional trader. He actually started, like a lot of us in options, but he gravitated to futures. He began his trading career in 1995. Within that first 3 years, he moved from options over to commodities. He developed, commodity systems and had built systems for other professional traders and other professional trading organizations. Over the last several years, he's kind of navigated to 3 different markets, the euro, crude oil, and the S&P, but he doesn't do the S&P anymore. And we'll get into some of these reasons. He is a member of the NFA. He has a Series 3. He's been a commodities trader. He's got his MBA from University of Texas at Austin, which is a great business school for those of you who don't know. His Night Owl system that we originally started talking, like Mark mentioned, back in 2010 or so, is all rules-based, mathematical, no discretionary. Everything is built into his system. He's traded it with a number of different markets in U.S. commodities and other asset classes. And for the last 6 years, as we talked about, he's really ended up focusing on these 2 markets, the euro and crude oil.
I love those 2 markets. We'll get into the why later on in the discussion.
Yeah, I really look forward to it. Well, you know what? Let's do this now. Mark, would you start, and give us just an overview of Night Owl and, what the system is and how it's come to be in the state that you have it in right now.
Okay. Well, as you were saying, Night Owl was developed by me I began the development in 2011, and I was motivated to find a better strategy than what I was using at the time. I wanted a strategy that would seek short-term profits in various manners, including momentum bursts, cycle reversals, and pullbacks to known support and resistance levels. All of the plays that I do in Night Owl occur in the direction of a market's underlying trend, or predominant move is the term I use. And the strategy determines that on a nightly basis. It's during my homework period, which I do every single day between roughly 2:30 p.m. and 6 p.m. Eastern Time, using non-discretionary concepts, I should add. If it's necessary, I will use long options to hedge directional futures plays. I mean, that's something I've built into the system. I confess I have not done that in maybe 2 to 3 years. I've used it strictly as a directional strategy as Night Owl's accuracy has improved. I do prefer using a strategy for day trading purposes, and with for the bank that I trade, that is a requirement. I am required to be flat every day at 4 p.m. That's the bank's rule, not a night owl rule. But I am allowed to re-enter at 6 p.m. when Globex trading resumes, which I typically do. Most of my entries will occur in between 6 and 8 p.m. and then we'll stay in the plays for the following until the following afternoon at 4 p.m. I will add a couple of things about risk management, because again, this is the most critical element for any bank that you will trade for. If you're a professional trader, it's not about profit, it's about risk management. That's the name of the game. All of the night owl entries will include protective stop loss orders. My particular strategy also employs a trailing stop, which will follow along the market in trending move, like what we have seen wonderfully in Euro all week long. This has been a fabulous week for trading the Euro. Most entries will elect either on a limit order or a market if touched order, depending on a trader's preference. The system is developed for MITs. I personally will use a limit order just so I can manage my slippage. Very occasionally we will have a momentum burst kind of trade, and for that we will use a stop-based entry. All of these entries are specified in advance. The system lets me know in advance what we're looking for, so there's no guesswork involved. All of the exits occur either with MIT or limit, again, depending on whether one wants to manage slippage with a limit order. These exits are all at predetermined prices. Once again, there's no guesswork, because if there's one thing I never liked about trading when I was trading other people's systems, is trying to guess what I was supposed to do. So Night Owl is something I developed initially for myself so that I wouldn't be dealing with these kinds of questions, but now that I made it available to others, and having been in the position that other people are in now, I've designed it so that it will have a minimum, or literally no guesswork involved. Enter here, exit there, be flat by the end of the day. I mean, it will come down to be something as simple as that. So I'll turn it back over to you, Jim. I hope I've given a brief overview of what Night Owl is all about. Hello. So you're telling me you can hear me, because once again I hear nothing. Can you tell me? Can you type in how I can dial into the meeting with a telephone? I see several people.
Guys, okay.
Now I hear you again.
Okay. So if I can, let me just recap. Okay, Mark, what you had said, and so we move on. Mark's system, he does work at night to determine the market direction. He'll end up either choosing, a bullish or a bearish position in his two markets. He will set his entry points and he will set his exit points. They are systematic. They are calculated. We're going to get into how they're calculated in a minute. And it is a scaling system. It's not like there is a one trade. Here's the one entry. Here's the one exit. There'll be a series of entries and a series of exits that he'll end up going through. Mark, is that a fair, brief synopsis, or is there anything else that we ended up missing in the overall system?
Well, let's emphasize that for anyone who subscribes to my advisory service, they will be receiving an array, and for each market, the two markets, crude oil and euro, and that array will list the likely points of support or resistance, depending on whether we're looking for a long or a short, with those points, those will be the entry prices. For each entry price, we will specify 3 prospective exit prices. I will indicate which of those entries I am using or basing my stop on. So for those who want to follow along with what I'm doing, they will know exactly where my stop is. And likewise, my own personal preference when I trade for myself and for the bank, I take all of my contracts off at the second of the 3 target prices that I will provide, and I will trail a stop for the 1 remaining contract that's on. I'm not sure I said that clearly, so let me repeat that. Of the 3 targets Alpha, Bravo, and Charlie, I will take off all but 1 of my contracts at target Bravo and trail that remaining contract with a stop.
Okay. Some people always ask, is it a black box system or not? We'll get into that in more detail, but basically you're given the limit prices, okay, and stop prices of when to end up getting into a trade and then when to end up scaling out. You're not only given the entry prices, but you're given sometimes as many as 8 or 9 different entry prices. And so you get to end up choosing, okay, I'm going to end up entering on the second trade. The first one is too close. There's too much risk. And Mark will end up going through and he ends up explaining the different entries and how much risk would be in each one of them. You'll end up then seeing when to scale out. Normally what Mark will end up doing is that he has 3 basic prices to end up scaling out. He'll tell you which one he's choosing, but you end up getting to choose. Basically what he's doing is that if you want to consider the black box, the pivot points or the points of inflection or however you want to end up looking at it, where the market's most likely to end up turning, are given to you. Okay, and they're given to you in an array, meaning that not just 1 or 2, but it'll say like if you're going to end up in the first entry, if you're going to end up entering at A, your exits could be at point B, point C, point D, and so you'll end up having that whole array. And what Mark ends up doing is that he shows you which one he goes into and how he gets out, and how he ends up doing that. Mark, from a technical analysis or the other quantitative methods, how do you end up determining what those inflection points are to either your entries or your scaled exits?
Well, this goes back to something I developed in 2002. It's a universal price table that is based on the ancient Egyptian square of 9 concept. Without getting into all the nitty-gritty of that, it's something that W.D. Gann investigated almost a century ago. And a little more recently, Murray Math is somewhat based on the square of 9. But my own development is to use the square of 9. And for those of you, by the way, who don't know what square of 9 is, I would suggest you just do a search online because it's beyond the scope of this meeting to discuss that. But I have written a computer program that will calculate square of 9 values from 0 all the way up to 101,000. And from those values will come the prices that I use in trading all markets. And again, I've done this now for 16 years, and it is absolutely amazing. I am still amazed by this 16 years later, how frequently a market will stop on a square of 9 price. Part of the reason for that, just so there's some understanding here, part of the reason for that is the person who first taught the square of 9 concept to me back in the middle 1990s, my mentor, was a trader in the futures pits at the Chicago Mercantile Exchange. He traded pork bellies. He also traded currencies back when this kind of trading was actually done in the pit. And he taught this to me because it's what he had learned in the pit from other traders. Turned out there were many traders who were using the square of 9, and therefore those prices tended to act like magnets. That's where the entries and the exits were occurring. And therefore, to this day, that still seems to be the case. That way more often than what you might otherwise expect, a market will stop at or very close to a square of 9 price.
Okay, just to kind of end up wrapping up about how important the work that Mark has done, and there's, you know, hundreds of thousands of lines of code in what he have done. But when it comes to the high frequency guys, when it comes to the algo guys, you know, a lot of people who believe in technical analysis don't believe in technical analysis. Sometimes it's a self-fulfilling prophecy. If everybody thinks that, you know, we're going to end up hitting the 20-day simple moving average and bounce, a lot of people will end up doing that. Now, sometimes you guys heard me talk about Kraken snaps, right, where they'll break through the 20-day moving average. Maybe they break down below it. They'll find a support level at some point below that, and then they'll bounce back up. Now, here's where this stuff becomes really important. Computers are doing this, not individuals a lot of times. So how do they end up determining? What you're looking at is one of the basic algorithms, one of the basic building blocks that many of the algo traders use and have used for many years. They used to do it by hand, and now what they've done, kind of like Mark, they've built this into their trading system, except for they're doing it with much, much greater capital, and there's a lot more speed involved. Mark's system, which I absolutely love, doesn't trade that frequently. It's not like a high frequency trading system that goes in and out. He has usually one entry, okay, maybe scaled entries in if the market ends up going, you know, in his direction or against him. He'll end up scaling into maybe having 1, 2, 3 contracts on, and then for each of them, he'll end up having different points where he gets out. Now, if you only have one contract, you can't scale out in 3 different ways, but if you have on 2 contracts, you can end up scaling out with the 2 contracts. So he's done that, and what he gives you, okay, what I end up getting every morning from Mark is a table of these entry points. Now, not only, by the way, is this great for trading futures, but if you have an adjustment point, let's say in one of your condors or one of your butterflies or one of your other trades, and it's getting close to one of your points where you might have to make an adjustment, I'll always look at Mark's points of inflection, and I know you don't call them that, Mark. It's what I always think that they are. They're things that could be support or resistance where the market's going to end up turning, and I'll end up using that sometimes to time my adjustments. So it's a very, very useful thing. Mark, can you explain a little bit about how the technical analysis uses and the moving averages and the things that your system's based upon in terms of what our folks would understand and what we would call technical analysis?
Well, it's actually quite simple, and there's nothing in Night Owl that hasn't been written about quite extensively. The strategy identifies its directional trends by evaluating exponential moving averages. We look at 4 different time frames, and then we confirm those time frames with 3 additional time frames that are calculated in simple moving averages. So of critical importance is that Night Owl compares the position of those 7 moving average curves on a 10-minute price chart with respect to each other. Then using that information in conjunction with market profile prices of control from the past 2 to 6 months, it enables the strategy to calculate with precision the depths of retracements that we can expect to see. Those are the retracements in which Night Owl then will base its entries. So this is really the sum total of the technical analysis that I'm using. I'm using moving averages in conjunction with market profile. Now let me add this, because this is where Night Owl differs from what your members may already know about market profile, if they know anything at all about it. Market profile, as with most technical indicators, was developed for a specific purpose and is used for that purpose. When I first learned market profile, which was in 2012, that was a major addition to Night Owl back then. Night Owl was about a year old at the time. I learned the basis under which market profile was meant to be used. I don't use it in the way it was intended. I don't use it in the way I was taught. I have found a use for market profile that, to the best of my knowledge, nobody else is doing. I have never taught my means of using market profile in Night Owl. The last time I taught any student at all in a one-on-one situation was before I knew market profile. So unless somebody else somehow has concurrently developed what I have developed without either of us knowing what the other is doing, to the best of my knowledge, no one uses market profile like I do. And I have found that market profile used in the way that I am using it is just phenomenally accurate in letting me know when to take a reversal trade, for example, versus when not to, when to stay with Night Owl's original determination of direction. What does that mean? It means that over the course of those 22 hours that Night Owl is active each day, we don't always get a move that just goes from point A to point B in a straight line. Sometimes you will have a market that is trading back and forth between a high and a low, and you need to determine, how do I know when to take a reversal? Well, Night Owl lets me know that based on market profile and where we are with respect to that market profile. Now, our subscribers are not going to see this detail because I'm not teaching Night Owl per se. Night Owl is far too complex for an average person to learn without having all the background first. And the background is substantial. I mean, if Night Owl were a class at a university, you could spend the entire semester on it and not learn it all. And just as an aside, my academic mentor from the University of Texas has invited me back to the university more than once to submit Night Owl as the basis for a doctoral dissertation, because while the tools that Night Owl uses, the indicators that Night Owl uses, are not proprietary. It's the use of those tools and the research that has gone behind how I use those tools that is proprietary.
Okay, that's absolutely great. You know, Bowden ended up writing that he's a member of the CME, and he's still amazed at how much the square of nine, tool, right? That's the public domain tool, and it's your usage of it. The thing that makes this, in my mind, so useful is, you called it an array before, and
Yeah.
the array of numbers that comes out are usually it's going to be a column of maybe about 8 rows and 4 columns, and the 8 rows are entry prices.
Right.
Square of 9 entry prices of when to end up going into a trade. There'll be limit orders where you end up saying, once you come down to here, here's where you're going to end up buying. And then it'll end up showing, if you do get to that limit and you bought 3 contracts, here's you scale out, a third at point A, a third at point B, and a third at point C. And those A, B, and C, those are the other 3 columns. So every day when Mark sends me, and it varies sometimes, but usually it's about 8 rows deep and about 4 columns on. First column is entry price, and then the scaling out of the other prices on 3. Now, there are even more scaling prices above that, but it gets to be just way too much work for Mark to end up posting them all. But sometimes, not even on that third entry point, but sometimes, that third exit, when you're scaling out, a scale a third, a third, a third. Sometimes when he ends up showing me, sometimes we scaled out, Mark, right? What we were talking about, the euro, where it went out on like the 12th, a square of 9 point that you had one day?
We did have it reach target Lima, target L. And in the case of euro, the targets are roughly 30 ticks apart. So Lima would be 200 ticks, give or take. So that is the reason I don't do a third, a third, a third. There's nothing wrong with doing a third, a third, a third, like you were saying. The beauty of Night Owl is you can use it in multiple ways. My preference, this is just Mark talking, this is my psyche working now. I know that even if I'm on the wrong side of a market, over the course of those 22 hours, the likelihood is better than 50% that even if I'm on the wrong side, it will get to target Bravo. For that reason, I will take my contracts off at target Bravo with the exception of a trailer. And I will trail that one contract for those days when we will get the target Limas. And they don't come along very often. You may have 3 or 4 of those in a year. But there are enough target Echoes and Foxtrots, E and F, where we can expect to see 4 to 6 of those over a month, once a week per market. And I like those. I love it when I can have a system that can withstand the back and forth, the inevitable back and forth that you're going to have, knowing that in the night owl analysis that I did way back at the very beginning, the crude oil is rarely going to exceed that 80 cent plus or minus range, and the euro is very rarely going to exceed its 60 tick range, and I will keep my stop outside of that range, and that allows me to stay in these moves all day long. And we've had a whole week of that with the euro. I just love it.
Yeah, it's been incredible. It's a so I'm going to just go back to what you're getting is not just the square of nines. Mark is laying everything out for you, but then you're getting, his market profile and what he's going to be doing. And so from that perspective, if you decide, hey, I want to trade a little bit more aggressively, I want to trade a little bit more conservatively, you can end up, bending the system to do what you want because he's giving you all of the numbers and showing you which ones he's taking. Mark, one of the things you talked about is that how things have done really well over the last week. One of the things is that we saw, most of us are equity guys. Some of us do trade oil, some do trade the euro. Can you talk a little bit about, because we saw 2017 as the year that volatility died. Can you talk a little bit about how did the system work in low volatility, and how come you chose not to trade the S&P anymore?
Well, the answers to those questions are a couple of different ones, so I'll take the volatility question first. Night Owl works well in any market where the volatility is strong and the market offers excellent liquidity. Crude oil is, when you consider all of the various series of crude oil, not just the front contract, but all of them, crude oil is the most heavily traded, the most liquid commodity market there is. All of the major currencies also offer excellent liquidity. So for that reason, when I began developing Night Owl, I had it in my mind that it was going to be trading crude oil and at least one currency. At the time, I was also trading soy meal, excuse me, and the S&P. Those were the original four. I dropped soy meal first, and I dropped S&P a few years later, not because there was anything wrong with them, and not even because of the volatility dry up that we have seen in S&P in the last year or so, but simply because I needed a life. And in developing Night Owl was taking so much time and requiring so much research, I decided I would stay with the two markets that were offering me the best volatility and reasonable liquidity, and those happened to be crude oil and the euro. If I were starting fresh now, I would seriously consider the Australian dollar, coffee, and cotton. Those are all markets I have traded before. They all have excellent volatility right now. The euro is in a period of excellent volatility right now, as I've been saying. Crude oil volatility is in about the 30th percentile. I'd like to see it return to 50. I think it will in 2018. But it's a relatively, and one may say, well, how can that be? We've seen crude oil go from $30 to $60. And yes, it has. If you were to look, though, at a daily chart of crude oil for the year 2017, it's a capital V. For 6 months, it went down. For the next 6 months, it went up. It ended the year almost exactly where it started the year. So on a day in, day out basis, the liquidity is just not where I would like it to be. But it's still tradable. Night Owl can work in a market that has low volatility, but as with many or most systems, I won't say all, but with most systems, it works best when volatility is strong.
Okay, and one of the things that was interesting is that with 2017, we saw volatility get very low in stocks. But one of the things that has happened, at least that we've noticed, is that we've seen trends last longer. So have you seen that? Have you seen where volatility is low? And of course, you want it to end up being bigger because you're trading the intraday. You're going home flat every night.
Mm-hmm.
You want to end up seeing the bigger volatility, but you've probably seen a lot more of the same direction day in and day out, meaning, during the first half of the year with where you talked about the right side of the V going down and the upside going up in your different markets. So you've probably had more of the same direction. But again, none of that really concerns you, right? Because you're out every night.
It's right. I am flat every night, and again, the bank requires that. But I will say this about volatility. Low volatility is the most difficult thing with which a trader needs to contend. It simply makes predicting market direction difficult because essentially what you're evaluating is the market noise rather than the strong pushes up or down.
Right.
And so, in the extreme case, in the case of Night Owl, it can easily substitute a market with better volatility. I haven't needed to do that, but I mentioned that if I were starting fresh, I would pick Australian dollar, coffee, and cotton just because of the volatility. But euro volatility is still good.
Right. And so Mark, can you talk to us a little bit about what do you see the biggest strengths and weaknesses of the Night Owl trading system after so many years of trading it?
Well, the biggest weakness probably pertains more to me than what the subscribers would have to contend with, but Night Owl is dependent on my end of day analysis. It can and it does identify intraday reversals, but it's not a model, it's not the kind of model that one can use for jumping in and out, in and out, in and out multiple times each day in the same direction. Or to put that another way, it's not a scalper's tool. I don't like scalping. In fact, I don't like sitting in front of a screen all day. That's part of the reason that I developed Night Owl the way I did develop it, was I recognized my own weakness as a trader, that I get impatient sitting in front of a screen. And so I wanted a system that would play a wider stop, but require fewer entries and play for a farther away target. That's what Night Owl does. And therefore, if somebody is the kind of trader who wants to jump in and out, in and out, in and out all day long, that's not what Night Owl does well, and it's not what Night Owl is meant to do well.
Right. And I actually look at that as the flip side, right? I actually consider that a strength in the sense that I'm only going to have, a couple of maybe a few entries per day. Okay. And I'm going to end up having nice wide stops and nice wide or reasonable profit targets. And I love the fact of what you said before. And I just want to reiterate this to make sure everybody understood before. Even when Mark's Night Owl system gets the direction wrong, because of the wider stops that he has and the target entries, over 50% of the time, when he's gotten the market direction wrong, he still gets to the second, right? When Mark always, being an ex-military guy, right? The first point is alpha. When you hear him, when he talks about Limas and stuff, it's alpha, beta, Charlie, right? A, B, and C. 50% of the times, even when he gets the direction wrong, he'll get to that second B or beta point. And so he's making his profit many days, even when he's wrong.
I call that defensive trading. No model is going to be 100% accurate. Night Owl's accuracy is around 70%, 73 in the year 2017 to be more precise. So that means 27% of the time, almost one day out of four, Night Owl has predicted the predominant move to be in the opposite direction that it ended up being in. And yet I have far more than 70% winning days because of the defensive trading, meaning that even if I'm on the wrong side, the odds are in my favor that market will get to target Bravo, and it's Bravo, Jim, not Beta. But anyway,
sorry.
it gets.
I'm not a military guy. I apologize to every serviceman in the world for that one. Sorry, guys.
It does get to Bravo more than half the time, and that's why I pull my contracts off there, because if I'm going to be wrong, I'd rather be wrong and be flat.
Right, exactly. So the thing is, I heard a couple of things here, guys. Right, 73% of the times the system picks the right direction on the day. 73% of the times. That is unheard of in regular trading systems. Systems like this always end up going in to be proprietary trading systems for banks. Oh, wait a second. This is a
This
proprietary
is a
trading.
proprietary. Yeah, I was going to say, Jim, that's one reason I cannot reveal the secret sauce. Night Owl, like all models, has a secret sauce, but I am not at liberty to reveal it because this is a proprietary system that's traded for a bank.
So while the square of nines is a great thing, that you have the table and the layouts for where there may end up being pivot points. Mark's market profile and the system that he's developed picks the right direction 73% of the time, and then when he's wrong, it still ends up getting to the second point. Bravo, not Baker. More than half the time. And so when you take a look at this, I've been so impressed by a few things. The first one is the accuracy of the direction. Two is the consistency of the trades is even more correct when it even has a higher winning percentage than picking the direction. He can still end up winning trades when and not pick the correct direction. And then the third thing is that because he's flat every night and because there are limit stops, yes, his losses may end up hurting, a little bit more than some of the winners, but they're very well defined. They're very, very well defined. And when you have that type of winning percentage and those types of numbers, the overall system has been really, really great. Mark, the next question that we had here was that, is there a market environment where you've gone through where your system just has performed very poorly? Is there an Achilles heel, or is there just a lower profit area? Or can you explain the weakness?
Well, the worst year that I had with Night Owl was 2015. And that was a year that was marked somewhat with low volatility. So low volatility was a culprit, but also in 2015, and this is now just Mark talking, this is the way I am. If something doesn't work as I expect it will, I will dig into it to find out why. And in the case of 2015, and for that matter, 2012, when I brought Market Profile into Night Owl, but in 2015, I discovered something else that would benefit Night Owl. It was not one of its components. So in 2016, I tested that component extensively and adapted it into Night Owl, which improved the performance. And again, I'm not at liberty to say what that was because, again, this is a proprietary system for the bank. But that component that I added has come into play multiple times in the last 2 months. And without it, those months would have been a little more difficult. With it, we did well.
That's great. That's great. And Mark, I've known you now for like we talked about 8 years or so, and I know that Mark's relentless when it comes to this. If things aren't working well, I mean, it's what time did you respond to my text? Okay, this morning at like 3:30 or 4 o'clock in the morning.
It was 4 o'clock, and I'm always up by then. I generally get up between 2:30 and 3 o'clock in the morning Eastern time. This is by choice, by the way. Nobody requires me to do this. I do it, A, because I love what I do, and B, because that happens to be around the time when Euro trading picks up, because the European banks are trading their currency reserves amongst each other. And when it's 3 o'clock in the morning here in the Eastern time zone, it's 9 o'clock in Central Europe. So, I feel that if I'm going to trade Euro professionally, I need to be active when the other professionals, especially those in Europe, are active.
Even though, you could end up putting in your limit orders or your market if touch, or, you could end up putting your system orders in so that you could sleep if you were a normal person.
Actually, I do that. I do put my orders in. The bank requires me to have my homework done by 6 o'clock. And the homework, I keep referring to homework, but for those who don't understand what I mean, that's the analysis that I have to do at the end of each day to determine what Night Owl will play in the next trading day. I have to submit my trading plan by 6 o'clock. Occasionally I miss that deadline, and they're cool about extending it a little bit. I don't think I've ever missed it as late as 7 o'clock. But be that as it may, I place my orders as soon as my homework is done, and either they get filled or they don't. The limits that Night Owl determines are good for those 22 hours from 6 p.m. to 4 p.m. the next day. They don't change. What will change is if Night Owl senses that we need to take a reversal. Those come along a couple of times a week. And, you know, if they come along, then I will put those limits in and pull off the unfilled orders that were already out there. But that's really it. I mean, I'm not in and out. And no, I don't necessarily have to sit in front of my screen at 3 o'clock in the morning, but I do choose to do that so I can catch up on what I've missed over the last 6 hours or so, because I'm usually in bed around 9 o'clock at night. And I do that to feel comfortable that I'm back in touch with what's going on, so that by 4 o'clock, you know, I can answer your questions, Jim. I think that's around the time I answered them.
Yes, it is.
Yeah, and that's a fairly routine day for me. And then once I feel caught up, I will go outside and do my exercising and come back in around 5:30, and then I'm at my desk like most people until the end of the day. And that's a typical day for me.
Yeah, no, and it is. It's. I know, because when you send out your homework, so to speak, the output that I get from your homework is that array table, the entry prices and the different targets, okay, to be able to end up getting out at the, you know, Alpha, Bravo, Charlie. And we end up seeing it. So it's a great thing. Mark, we've kind of talked about a lot of things about your system. Is there any other things, any unique things, okay, that the Night Owl trading system or the way you traded at the bank?
Well, one thing that I can bring to the table here, and hopefully this will benefit the Capital Discussions subscribers. For those of you who want to become traders, and maybe you just don't have a lot of money available for trading, or for those of you who have a well-defined investment portfolio and you don't want to disturb your portfolio by bringing in a new system, here's what I can bring to the table to help solve that problem. In conjunction with Capital Discussions, we are prepared to introduce you to a bank, a U.S. bank, for which you can trade their capital. They will put up 100% of the risk capital. They do not allow their traders to put money into the trading. Traders are free to trade their own capital, but they have to do so in a different account, in their own personal account. But the bank will put up 100% of trading capital, up to $150,000, for anybody who can show the bank in real time, not with hypothetical back testing, not with performance results from years past, but in real time simulation. So what does that mean? It means that we will connect you with that bank. You can go to that bank with a trading system in hand, meaning the Night Owl system with its entries and exits. You can then participate in the tryout that the bank will put you through. And if you succeed with your tryout, the bank guarantees that they will provide your funding. And the provisions are, of course, you have to comply with their rules. Obviously, if you don't trade by their rules, you won't get the capital. You know, they hold the gold. It's the golden rule. They hold the gold, they make the rules. And the rules are fairly simple. For $150,000 of tryout or of simulation trading, you must make $9,000 of profit. To do that, you must do it in no fewer than 10 days. So they're not looking for home run hitters here. If you make your $9,000 in under 10 days, they will make you do the 10 days anyway. So that's rule number one. You must trade a minimum of 10 days to make the 9,000. The second rule is they will not allow you to have a drawdown in any one day of more than $3,000. And the third rule is your overall peak to trough drawdown, high to low water, cannot be more than $4,500. They do have another rule about you cannot trade on either side, 1 minute of either side of certain news items, such as today's jobs report, Wednesday's Fed announcement, and they specify in advance the ones that you cannot hold a position through. But that's it. If you show the bank that you can make $9,000 and stay within those limits, and it doesn't matter if it takes you 3 months to make $9,000, it just that they will require it to be at least 10 days. But if you show them that you can make the $9,000 in the real-time simulation on their platform that they will set you up on, they will fund you with $150,000. And so that's what I'm bringing to the table. That's what I'm bringing to capital discussions to this meeting today. You have the availability to get that 150, and Night Owl will provide you with the futures strategy that you can use, because it must be futures trading. That's the only thing that this bank does. They don't trade options. They don't trade equities. They trade futures. So that's what this meeting today with you is all about. And I believe, Jim, you will be providing, I think you told me that you will provide in an email after the meeting or over the weekend exactly where the traders go to sign up. Am I correct about that?
Yeah, what we'll do is
Okay.
that we'll collect everybody's name. I'll end up asking you to send me an email. And so that if you are interested in doing this, it'll end up being part of the subscription. You'll end up going through it. You'll pay for the service. Now, it's not a black box system. If you wanted to end up trading this system with the bank, right? If you wanted to trade this system with the bank, what Mark is doing is that we're going to be able to end up helping you to end up getting set up with the bank.
I need to interrupt quickly, Jim, because I'm just thinking about what I've said, and I realized I left out a very critical element. I've told people that the bank will fund them with $150,000 and take 100% of the risk, and that's great. I mean, that's wonderful. But what does the trader get out of this? The trader is allowed to keep 80% of the profits he makes. So, I mean, it's a hell of a deal. The bank is taking 100% of the risk, and they're only taking 20% of your profits. But this bank has done this for several years, and they have traders all over the world. It's the way they diversify their own portfolio. I wish I had thought of this when I came out of MBA school 35 years ago, because I think it's a hell of a business model. But this is what they do.
This is the most important point here. People who want to become professional traders, and Mark's been doing this for, like you said, 23 years. He's been looking at proprietary systems, meaning that going to banks, going to prop shops, taking his trading and having somebody else fund his money so that he can he could then end up trading it. And so what he found was a place that, quite frankly, has the best prop shop deal I have ever heard. There is no relationship, between Mark and the prop shop,
Or I'm not getting anything out of promoting this.
Neither is Capital Discussions. What we're doing is that we're bringing a system, right? They have some very tight rules, as Mark ended up explaining. We're bringing, Mark's system, which ended up fitting within those tight rules.
Right.
Okay. If you're a prop shop trader and you want to go someplace else, you want to do anything, you can end up going and finding your own prop shop. This one just happens to end up being, and we're not going to end up going over this in this webinar because it's Mark's done a lot of work. We're going to end up doing it for all of the subscribers. We'll end up working with the subscribers to end up getting them set up on it.
Now, I'll interrupt very quickly, Jim, just to make one point. Sure, there are prop shops out there that'll put up the great bulk of capital, but most prop shops, even to this day, expect the traders to put skin into the game. This particular bank does not. In fact, they will not allow you to. They are not set up to even accept contributions or deposits from their traders. Sure, you're allowed to keep your accrued profits in the account if you want to, and you can increase your lottage by doing that. But if you wanted to put $10,000 into the pot, into the kitty, they won't allow that. You'll have to trade that in your own account at your own brokerage. And I think that's fine. You know, I think this is great that there is a bank out there that's willing to take 100% of the risk and only require 20% of the profit.
All right. Yeah, I think it is also. It's kind of an amazing deal. If we just kind of end up, I want to end up getting through the rest of the questions, and then I end up seeing all of you guys are asking questions. I want to get to everybody's questions, but let's finish the ones where we kind of already have a Mark set up with, and that is Mark. In terms of your performance, what was your best and worst years? And I know that it's proprietary and you can't end up saying, but in general, can you talk about in the system and kind of give us ranges where, you know, we would have seen if we used your system, okay?
Sure, sure. The best year was 2014. We delivered a little more than 150% to the bank. The worst year was the next year, 2015, and I already talked about that a little bit as to what I needed to do to fix it. That was a return for the year of 23%, give or take a point. That was the worst.
Positive 23%.
Yeah, positive.
I just want everybody to hear that.
I designed Night Owl to be more of a, I'm going to use a baseball analogy. I'm a singles hitter. I'm not a home run hitter. I like consistency, and Night Owl can consistently deliver a 4 to 6% per month return. Occasionally it'll get the 20, but I love that consistency. You know, I'm Tony Gwynn or I'm Rod Carew. I'm not Mark McGuire or Frank Howard. If you know who Frank Howard was or who he played for, then that kind of gives you an indication of what my own age is. But anyway, that's what Night Owl. That's how Night Owl performs. It's not the home run hitting system. It's the singles system. It's a 330 batting average kind of system with in its case, about a 70+% winning percentage.
Yeah, no, that's absolutely great.
And by the way, you know, on that subject, you know, whether you're evaluating Night Owl or any other system, don't get hung up on the accuracy percentage. Sure, 70% is great, but if you're risking if you're risking $4 to make $1, such as with a credit spread, 70% is not going to cut it. On the other hand, if you're trading crude oil and you're risking 80 cents to make 60 cents and you're winning 3/4 of the time, you're going to make money. So the point is, accuracy percentage by itself, while important, is not the critical element. It's the combination of your accuracy percentage with your reward to risk ratio. You can read in any probability textbook or online, look up the concept of expected return, because that's what we're talking about. If the expected return of a system is positive, go with it, because that's the system that makes you the money.
Guys, have you heard this before? Mark, thank you very much. I end up, repeating this all the time. People talk about winning percentage, and you can't do that. When you combine the winning percentage along with your average wins versus your average losses, you get to something called expected return. And you have to end up using expected return because of the amount of risk. The great thing about what Mark is talking about, many times when people do credit spreads or iron butterflies on both sides, you'll end up taking a look where we might be risking, especially if you're doing deep credit spreads far in the money, you could be risking $1, to only make 10 cents. And that's the example that Mark gave, where it's a huge issue. The fact is that when Mark talks about wider stops, use the example of taking 80 cents of risk for having a 60% winner, a 60-cent winner, and doing that far greater than 50% of the time, doing that far greater than 73% of the time. Mm-hmm. And so when you look at those types of expected returns, they're just fantastic. They really are. There's a question in here, and it's also here. Has your system ever lost $4,500? Or what was your worst your drawdown peak to trough, as you said?
I can answer that question in two ways. Since 2016, when I put the add-on in, and prior to 2016. Prior to 2016, in other words, 2015 was my worst year. The peak to trough drawdown was 6.4%, and that will not cut it with the bank. The bank will not the bank does not want to see a drawdown of more than $4,500 on $150,000, whatever that percentage is. I guess it's around 3%. And since I have implemented the add-on from 2016, the worst peak to trough drawdown has been 2.8%.
Wow, congratulations.
Well, again, it has to be within that parameter. It has to be within the bank's parameter. By the way, I want to emphasize it's up to 150. If a trader is not comfortable with trading 150, nobody's going to require you to trade 150. They do increment, and I believe the lowest increment is 30, and the highest is 150. The nightly array that I will be publishing is based on the 150 because that's where I started with the bank. But you know, one can scale it down. One way to scale it down would be to trade the mini contracts. And by the way, sometimes, and I will tell you this in advance, sometimes I will trade the mini contracts because there will be occasions, such as on a Fed day, where you are going to see tremendous volatility. And bear in mind, we are not allowed to trade on either side of a Fed announcement, 1 minute on either side of the Fed announcement. We're not allowed to trade 1 minute on either side of a jobs report. But even before or after the release of that information, you will often see wide swings. And the way I like to play those wide swings without getting knocked out of the game, I will use a wider stop and I will trade the mini contracts. And I will do that so that if I need to play 100-cent risk on crude oil and I play a QM contract instead of a CL contract, the QM is half the size of the CL, I'm not going to get knocked out of the game. So at least I'll come away with something. That's just one of the little tricks that I use to increase the number of profitable days I have. You will know in advance those days because, well, they're published in the calendar. The calendar tells you when the next Fed announcement will be, when the next European Central Bank announcement will be, when the next, well, in the case of crude oil, the inventory is on Wednesday at 10:30 unless there's a holiday involved. And then it's Thursday at 11. But these things are known in advance. And so if you know in advance when to expect these announcements, and you don't want to get knocked out of the game because of the back and forth swinging, play the mini contract.
I think that's a great example. I think we've kind of answered all of the questions. Right? We talked about peaks to trough. We talked about your years of performance. We talked about how's performance been in different markets. And do you see anything different, as we are here, as we starting February 2018? Is 2018 looking any different? How was your January?
January, we were up 3.5%, which is a little bit below what I like Night Owl to be at, which would be the 4%. But I'm okay with that, considering that, well, February has started off great with the euro. And January was pulled down somewhat with the low volatility in crude oil. But, you know, I have no reason to think that 2018 will be any different than the previous 22 years for me. And by that, I mean that Night Owl adapts to the changing markets, and it can adapt to any market. It's designed that way. Now, having said that, I would like to see, and I expect to see, an increase in the volatility of crude oil back to the 50th percentile. Because, you know, it's just like the weather. You know, it's if you can picture the bell curve. You know, we're in one of the tails of the bell curve right now, but invariably markets, just like the weather, revert to their norms. And the norm is the 50th percentile. And crude oil is showing signs of going in that direction. Meanwhile, I hope that the euro's excellent volatility will not dry up. But, I mean, if it reaches an extreme, if we're down in the 20th percentile or something like that, we'll move over to a different market, because there is always a market that is displaying excellent volatility. And as I said earlier, Australian dollar, coffee, and cotton are three right now with excellent volatility. And that's one of the great things about using a square of 9 price table, is you can easily shift from one market to another.
That's one of the most attractive things. That was all of the questions. I see a few of them here, but I thought what might be useful, Mark, if we could, why don't I just take one of the older emails? Okay, and this is the array table that we were talking about. This was one that you sent me almost a month ago, where it's for the March contract on the euro. It's the big euro contract, and it shows here all of the entry prices in the first column. The asterisk is the one that Mark's talking us. And can you just walk us through a little bit about how you use this and what? And I don't expect you to remember the specific trades, but how would
No, I don't.
okay?
Okay.
You can't.
I don't even remember what I did yesterday, but anyway.
Okay. But if these were your numbers, could you just walk us through a little bit about how you used, the third row and what your orders would be and how you'd enter and how you'd exit something like this? And you can see it on my screen, right? There's the one that you selected.
Yeah. The asterisk denotes the stop that I am going to use. It looks like 1976. I'm going to have to use my magnifying glass because I don't see it so well. Okay. It looks like it says 1976. And actually there I can see it better without the highlighting. Anyway, so, oh, that's good. Okay, so 2009 is the entry price. The L means that we're looking for a long. We're looking for a long at 2009 with a stop at 1976. That's fine, Jim. Now it's getting to the point where I think that's best. If market goes down, and it probably will, because bear in mind we're entering on limits. If market goes down from the 2009, the next entry is 2004. The next entry is 1998. I will have limits working at those three prices. If we keep going down, I don't keep adding and adding and adding, because what if we hit the stop at 1976? I don't want to get crushed. Besides, if we hit the stop at 1976 and I just kept adding as we went down, I'd probably be over the 3,000 limit that I'm allowed to lose in one day. So in that instance, I will take my limits at 2009, 2004, and 1998. If we keep going down, well, I may end up being wrong. If we go down to 1986, I will then work a stop limit at 1992 in the event market comes back. Because sometimes we will see that Night Owl ultimately gets the direction right, but we get a deeper than anticipated pullback first. And I don't want my entries that occurred at 2009 to overly weight my overall position. So again, or if we go down to 78, then I will put out a stop limit order at the 86. We may not get there. It may go down to the stop at 76. And if it does, well, then, we just took a loss because it's not going to be perfect. But most of the time, it will come back. And for that reason, I will work those stop limit orders at the prices below the first three lines in the array. Again, the asterisk indicates the stop that I am using. Now, regarding the targets A, you see the Alpha, Bravo, and the Charlie. If I have taken multiple entries, and let's make by the way, this is called Nightingale for those of you who want to look it up online and learn more about it. I'm using a Nightingale technique. This is not something invented by Mark Ansel. But anyway, if I have indicated my initial entry is going to be the 2009 and we're down at 1998 and I've now added my third contract in play, target A at 2008 tells me that's where I'm pulling one off. The target A at the next line up, 2014, I'm taking a second one off. Effectively, I am now long at 1998, even though my original entry was 2009, and I've got some profit already booked. And now I'm in a great position because I have bought in or very close to the low, and I'm playing for target B at 26, 32 for second contract, and everything will come off except for one contract at 39, which is the target B for the top row. And that's the contract that'll get trailed.
Okay. And Mark, what we'll end, I didn't want just for the sake of time, So we have a couple more questions. What we'll end up doing is that for subscribers, we'll actually end up, we'll create a video that'll end up explaining exactly, the entries and how we end up trading it. And again, when you talk about black box systems, Mark's going to end up explaining exactly how he ends up entering and exiting trades from this table. But that doesn't mean, Mark, right? If somebody wants to end up taking a little bit more risk or thinks that we're going to have a bigger pullback, they can use a stop at a lower price. It's really theirs. What they're getting is they're getting the square nines and they're getting the direction.
Well, I wouldn't be so arrogant as to say that my way is the best way. My way is a way. My asterisk shows you what I am doing. But if somebody thinks we're going to have a deeper pullback than 2009, they can play 1992 and they can use my stop at 76 and they're only taking a 16 tick risk. If they are right, and sometimes market will pull back to that 1992. If they are right, they've got a great play. The asterisk only denotes where I'm going to begin. That beginning will not be my only entry because I will keep some of my capital in reserve. I don't like, shooting all the, what's the analogy? I don't like shooting all the arrows out of my quiver thing all at once. I keep some powder dry, so to speak, if you want to use that analogy. I like to have contracts in my pocket that I can play in case a pullback is deeper than what I anticipated. But that's not to say that it's wrong to put all of your contracts on the third entry or the fourth entry or even the first entry. Because bear in mind, we're all concerned about, well, how much am I going to lose if I hit the stop? Very few people ever ask what I consider to be the more important question. How soon can you establish your position? Because what is the most frustrating thing for me is if I'm playing using these prices, if I'm playing 1998, I'm expecting a pullback to 1998, what if it pulls back to 2001 and then takes off in my direction? Long in this case. And I'm sitting there on the platform, I've just missed the train. I'm sitting there feeling like a fool because Night Owl told me the direction the market was going to go in. It gave me the prices to use, and I was too greedy, let's say, holding out for that farther away price as opposed to scaling in at the first price and just letting my position average itself, so to speak, and missing fewer moves that way. So yes, you need to be concerned with how much you will lose if you get stopped out, but you also got to keep in mind the lost or the missed opportunity if you play a price, an entry price that is too far away from the market. Right. I cannot make that judgment on a trader by trader basis because I don't know your traders, I don't know their individual risk tolerances, etc. All I can do is show you with my little asterisk what I am doing.
Now, one of it doesn't prevent somebody, say, from taking 2 or 3 or 6 entries, potential entries, if they want to, and they had the capital to. Of course,
or again, if the capital is a limitation, again, use the mini contracts. Right. You can play twice as many contracts with a mini as you can with a full size.
Right, great. Okay, let's go through a couple of questions here because I want to end up getting through the rest of them. And what I'll end up doing is that right now, Tom is in the process of moving. So what I'd end up asking, anybody who's interested, just send me an email, Jim at, I don't have the slide yet either. Send me an email at jim@capitaldiscussions.com. We'll end up keeping a list. Once we end up getting the page set up, we will end up doing so. Peter, this is very much what I consider a gray box system, where we're getting the information on the turning points. It was also asked, how do we end up calculating the points? That's the proprietary piece that Mark has gone through. Other things that were asked is hello from Tom Davis. He's in Central. He's from Kalamazoo. Okay. He wanted to say hello to you. Will there be a trial? Yes, there will be a trial. We'll set this thing up for a short period of trial. The subscription fee, because of 2 things. The amount of work that goes into this every single day, and also getting you set up with the bank for capital. It will end up being higher than our normal $100 a month subscription fee. You will end up getting Mark's video. He and I will do a video on how to end up trading this. You'll also end up getting our help to get set up with the bank. You'll have to do it individually. We can't do it for you, but at least we'll have the process that you'll end up going through, and the rules and everything that Mark has done to be able to get this. You're getting the benefit of Mark's looking for the best prop shop to trade for 23 years. It just so happens that they don't limit him, and meaning he can trade someplace else. They say that he's allowed to end up working with other organizations. And because this is more of a gray box than a black box, people will end up trading this however, okay, you seem fit. I think that Mark has done this long enough that it would be wise to listen to his sage advice on how he's gotten in and out. Once you're comfortable with that, if you want to end up varying things to meet your own style, go at it. But he spent a lot of time on this. John asked about what about the CL report that comes out on Wednesday morning? That's one of those periods. Do you remember when Mark said that there are certain times where you're not allowed to trade within a couple of minutes of a Fed announcement, or if you're trading oil, you can't end up trading around the weekly report that comes out on Wednesday?
That's correct, and it happens to be 10:30 on Wednesday morning, other than weeks where we have a Monday holiday, and then it'll be at 11 o'clock on Thursday morning. We're not allowed to be in the position on 1 minute on either side of that.
Right. So other questions that came in here is about the subscription, okay, and the money at the bank. If you want to trade your own money, okay, there's nothing to stop you from trading your own money. If you wanted to end up saying, well, I don't need the bank's money, I'd rather end up me trade my system I'd rather trade my money on my own system. I'm very comfortable with IB or with a Thinkorswim or whoever you may end up trading, okay, your future stuff through, that's fine. The bank, if you trade through the bank, you do have to trade through one of the approved bank systems. I'm not going to get into which ones are approved and which ones aren't, but there are several of them that you guys already know about. And I'm seeing if there's
I think you mean platform, Jim, not system.
Thank you. Yes, I mean platform, right?
Trading platform.
Trading platform is where, and a lot of people call them trading systems, right? But trading, our folks will. Trading platforms are the software that you're using to make the trade.
Right.
Now, you may end up using one piece of software to make the trade, but the trades would end up clearing someplace else. This is very, very common in the professional trading world, not common at all, okay, in the retail trading world. But again, we'll end up walking you through for those subscribers who want to end up doing this. There's basically two pieces to it. One, it's that you have to end up learning the trading system. Once you end up learning how to Night Owl and how it gets in and how to get out, okay, and you're comfortable with that, the second step would be to end up applying to the bank to be able to end up getting them to end up putting up trading capital. If you're trading this on your own system and you want to trade it with additional bank money, there's nothing stopping you from doing both. Either or do either one. So it's very, very flexible. How much time is required, okay, for the system? Mark, I've done this, and, you send out the emails, and, I think that probably from a subscriber point of view, if you're just doing this on your own system, it probably takes 15 minutes to a half an hour to go through everything, take a look at it, set up my systems, because I'll have orders for limit orders or for stop orders, and then one order triggers another. So depending on how good you are setting up your orders, if you're very, very good and you know all of your orders about how to end up triggering them, and one order triggers another, probably 15 minutes to a half an hour. Mark, how long does it take you to set up?
I was just going to answer it from my own experience. It takes me about 20 minutes every night to set up my executions, meaning the orders, getting the orders into the market. That takes me about 20 minutes because I will use contingency orders for the ones that I'm not entering on limits. And contingency orders take a little bit of time because you have to put in the contingency price. In the example that we looked at a few minutes ago, I think my contingency price was 78. And if the price hits 78, I want to put in a stop limit at whatever it was, 96. Those are the orders that take a little bit of time, but 30 to 40 minutes for somebody that's ascending the learning curve, 20 minutes if you're already comfortable with your platform.
Yeah, And then that I think that's very, very fair. It's I think I know for me most of most of my orders are second nature, so it's pretty quick. Um, the results of the asterisk, okay, back on the array tables, Mark called it. This is just the one that he's choosing to end up working with. Naturally, okay, where you're going, so you have to understand that you're entering the system with a stop. Okay, so that means that you'll want the direction to end up going in your favor. This happens to be, right, you can see that if this is the entry, okay, here's where we're stopping out of a position. Okay, and so you have to end up having your stop as well as your limit orders for what happens if I'm losing money, what if I'm going through. So the asterisk just happens to be the one where Mark is selecting. He may want to end up getting in at a lower price, meaning that he'd like to see the market come down before he gets in long. He may end up choosing a higher price where it's like, okay, he's going to end up having less profit or less potential. So, but it's all laid out there. And like I said, we'll end up doing this in a separate video, in a welcome video for those subscribers. The orders are placed, are the orders placed in the Globus section at 6 p.m.? Yes, they are.
That's correct.
Okay. How much time? I got that one. I think I've got all of them. Guys, is there any other questions, just type them into the chat. Otherwise, I think that we're pretty good. We don't have the page set up yet for you just to end up signing up for a trial. We will end up getting that. For those of you who don't know, Tom was traveling, okay, and he's in the process of moving, so we don't have that set up for you as of yet. But please send me an email. Just tell me you're interested. If you have any comments, okay, I'll get back to you. But I'll put your name on the list once we end up having this, and we'll probably do another webinar at some point in the future, kind of just to end up kicking things off for those people who are thinking in joining. And with that, thank you. Mark, anything you'd like to say to the folks as we close?
Well, I appreciate everyone who came today, and I wish we could have had more time to go into all of this in greater depth because we just barely scratched the surface. But I do encourage everyone who has an interest to at least come and kick the tires. We are, as Jim was mentioning, we are offering a trial with this. Also, the bank offers a trial of its platform because, again, once you are trading for the bank, once you've begun your simulation, they're not going to care what your excuse is if you took a loss. If you say, oh, I put in a buy and I meant to put in a sell, well, so sad, too bad, because they are going to provide you with 2 weeks to familiarize yourself with their platform before even the simulation will begin. But once the simulation, once the tryout has begun, the conditions that you are trading under with your simulation will be exactly the same, and I mean exactly the same as if you were trading the bank's money for real. It's the same $150,000, it's the same $9,000 goal, $3,000 daily loss limit, and $4,500 peak to trough drawdown. The rules will be exactly the same, so you might as well get yourself in the mindset that you're trading real money, because when you are trading real money, it won't be any different.
Good. Guys, thank you very much. There's my email. Send me the email. I already got 6 emails from you. Okay, so people didn't even waiting to the end of the video. Thank you very much. Send me an email and we'll send you information, okay, over the next week or so. Once Tom has everything set up, we really look forward to talking to you. Thanks, guys.
Thank you.